All right, big tech. Let's talk about all the big tech earnings. Okay, so today we have to talk about Meta platforms, Google, Apple, Amazon, respectively. I'm going to give you guys a very brief summary of the entire earnings for all of them. I know that you guys don't really want to read all those statement account and things like that, so I'm just going to explain it to you guys with a quick summary. All right, let's talk about Meta platforms. Right now, Meta platforms are basically just shoving more money into the furnace. The furnace is named Metaverse, burning up to a $4 billion in a quarter. My main question is, how do you burn $4 billion in a quarter? I don't know what they're spending on. They can be spending on manpower to do R&D, which is normal, okay? But I'm not sure how much are they paying for R&D, okay? But they're spending $4 billion in a quarter, okay? But anyway, drop in revenue as a whole, and of course, understandably, because the market share that they are having is a lot lesser now, with how TikTok is also coming up, and also a lot of other social media platforms are also stepping up in the game as well. Okay, so afterwards, we actually look at expenses going up by 19% year over year, probably the Metaverse furnace that is churning right now. The overall price per ad decreased 18% year over year, which is a humongous thing, and which is why you can see all those social media platforms out there getting destroyed, such as Snapchat. Alright, next up we got Google missing on EPS. This is a huge one. Alphabet, okay, because ad revenue as a whole, like I said before, for Meta platforms, ad revenue has been going down. Okay, so revenue seems to be increasing, however, for Google. Okay, but net income decreased. So of course, I went over to look at the statement for where they are actually spending their money. Okay. Where they're actually spending their money is actually their S&M and their R&D, which is sales and marketing, research and development. Okay, they are spending over a 25 to about 30% increase on those S&M and R&D, a broad increase for those. However, YouTube ads, supposedly their growth driver, actually dropped marginally by about close to 2% year over year, which is a little bit upsetting. We expected Google to be a very strong growth driver in general. Okay, personally for myself, I always thought that this year would be a very strong year for growth in terms of the ad business. I made that prediction and clearly I was wrong. I will probably be making a video on what I got wrong for my prediction that I made for this year. But I'll make it, I think, somewhere in December, and then we just kind of review how I actually did for my prediction. Alright, next up we got Apple. Okay, beating on almost every single estimate possible other than iPhone sales. Okay, but of course they kind of missed about like $40 million worth of sales. It might sound like a lot, but honestly speaking, it is barely anything because we're talking about Apple. We're dealing with billions and billions and billions of dollars. Okay, sales globally in general, other than a miss in China, everywhere else globally, all of them are basically a beat on estimate. And even though it was a miss on China, it was still higher year over year. So Apple is still a pretty good company in my eyes. Alright, the margins in general are very stable throughout, which is very important for a products company, like I said before. Okay, products company, you need to get your margins down, which is why whenever we talk about Tesla, we always talk about margin. Okay, because if you sell a lot, okay, I don't care about your net revenue. If you're not earning a lot of money, your net income is not up, you're not really a good company yet. Okay, so margins in general doing pretty good. Inventories also lower than last year, which is personally to me, I think it's a very good thing. I think it was a pretty good call for the production cut, because this way it also means that demand is starting to slow. They saw that the demand is slowing, they cut down their production. Very smart move. Alright, now let's move on to the other company that might not be as smart, which is Amazon. Amazon just basically misses throughout the entire board. Okay, huge misses throughout everything, basically showing 0% growth. Okay, personally, I said it before. If Amazon were to ever split the company apart, one is called AWS and the other is everything else, I will short everything else to the ends of the earth, because Amazon is not innovating anymore. It is not innovating anymore, and other than AWS actually bringing in almost all the profits, Amazon as a whole is not really growing anymore. Okay, and then of course we look at a big decrease on their operating income, almost 50% down, which is horrible. And of course, I went to look over at their inventories in general. Their inventories are like increasing year over year, which is kind of bad, because I feel that, it's either because demand is slowing, which is a very high possibility, or the supply is just not in sync. And either way, it's not a really good look for Amazon, which is why yesterday Amazon just basically sold off completely. All right, now, let's talk about all the growth expectations moving forward. Big tech, clearly, I just explained it for the past 5 minutes. Not the best earning that we have heard so far, okay, let's be honest here. But we still have one more quarter before 2022 actually ends. So hopefully we are able to see some better news for quarter 4. However, I do think that this will actually come in hand with what the Federal Reserve might be doing. Okay, a lot of the words on the street is that the Federal Reserve might actually be looking for a 50 basis point increment instead of a 75. Okay, so of course this plays in very, very importantly with CPI. If CPI were to start to show any sort of slowing down, this would be a good thing, because the Federal Reserve would think, oh, hold on, maybe all those basis points that we've been adding to the interest rate is starting to work. And since those interest rates are starting to work, maybe, just maybe, we can start to pause rate. And if they can pause rate or even lower the interest rate, then I think that all this big tech will be able to borrow more money. And when they can borrow more money, they can do all those things. Which is why, like, for example, just looking at Metaverse. If Metaverse is, look at Meta platforms. If Meta platforms, Facebook, is able to borrow more money, they can churn more money into the furnace. But of course, we definitely do want to see interest rate go down. But like I said before, I think inflation will definitely play a very, very big part. Which is why I always cover CPI every single month. Stay tuned for that video every single month, I guess. But anyway, personally, I think that the bottom would probably be very, very near. Because right now, anytime whenever the Feds decide to stop the rate hike or to even reverse the rate hike, that is when we actually start to see the bottom of the market ending. So yeah, hopefully that's the case, and hopefully that actually comes sooner than we expect. But anyway, I think that's all for the earnings. I want to keep it short for you guys. Hopefully below 8 minutes for you guys to actually go through everything. But anyway, if you want to support me, subscribe to my channel and also drop a like on this video. And also, if you want, just use the link down below to get some free money. Okay? So anyway, I'll see you guys in the next one. Thank you so much for watching.